Hello students, I hope you all are doing good and fine. So in this video, we will continue our discussion regarding your pre-mock December 2025 FR pre-mock. So we have completed the section A part. We have completed your section B. First question. Then we have completed the second question also, Harry Company. You can watch the recordings. If you have any doubts, you can contact me regarding FR or SBR. Chalo then, let us start with the question number 4. Question number 3, sorry. Hickson. A question known as Hickson Company. It's a question regarding Hickson Company. Okay, chalo, let us start with this. Yes, sir. Not wasting much of your time as exams are near. It's very important that we focus. Even a single minute is important. You have to enjoy. It's not that कि सर पूरा दिन बैठ के पढ़ेंगे अपन. ऐसा कभी होता नहीं है, पॉसिबल नहीं है. Relax, chill, allocate time. Sir, we will revise this, we will do this, etc. And continue with. And question practice is mandatory. Huh? See, knowing the concept is one point. Doing question is also important. It's not key, sir, will not do questions. Directly we will go to the exam and will rock and come. Yes, you can do it. But it's better that we practice, we give our mocks, we see the time management, each and everything. Chalo then. Hickson Company. H has prepared the draft financial statements. Okay, they have already prepared draft financial statement. If they've already prepared draft financial statement, that means some of the other things could be wrong. We have to adjust it. For the year ended 30th June 2006. Year end क्या है? Sir जी, year end है 36 June, 30th June 2006. Year end is. Adjustments are still required. See. Adjustments are still required in respect of deferred tax. Sir, deferred tax came, sir. If you think today only in our regular class we have done IAS 12 ka test series and errors. The following information is relevant. Okay, some errors are there and some deferred tax accounting is there. So we will do it, sir. We are very good at deferred tax, sir. We know how to prepare the ledger account. We know what will be the deferred tax expense, what will be the current tax liability, deferred tax asset, each and everything. Let us see. Okay, the first topic is regarding accrued expense. So it could be regarding some liability, property, plant and equipment, PP. Okay, that PP I can see a word here, taxable temporary difference. IAS 12 came into picture here. Lease arrangement, sir, IFRS 16, sir. Easy concept. Sale contract, it's again from revenue. Okay. And tax rate is given 20%, as it was mentioned in the question that this question is regarding from taxation. So it's very important that we focus on this and do it. As I mentioned in the class, that it's very rare that tax question comes in your exam, but I mentioned that 2 to 4 marks can come in your section B also with some other standard. Chalo then, let us start. The requirement. First, let us read accrued expense. Okay, sir, accrued expense. Chalo. The statement of financial position includes an accrual for expenses with a carrying amount of 2,560. So accrued expense means what? Accrued expense means we have not yet paid. Expense is done. खर्चा कर लिया but payment नहीं किया. We have not done the payment. So if payment is not done and we have taken the benefit, like I say that this month I've used my factory but I did not pay the rent. If I've not paid the rent, that means what? My expenses accrued. I have to pay. Liability है मेरे सिर के ऊपर. I have a liability. The expenses were deducted from profits in calculating the current tax charge for the year ended 30th June 2006. I'm not understanding what they have given this. Listen here. Sir, in our the question mentioned regarding deferred tax. Sir, accrued expense. In the accounting books, we have recorded a liability. In our accounting books, we have recorded a liability of this one, 2,560. Sir, how should we calculate DT and DTL? DTA, DTL. How do we calculate, Baba? We compare the carrying amount of the asset or liability in the accounting books. We calculate the tax base, that is carrying amount as per the tax books of asset and liability. We compare it. Sir, carrying amount we know, sir. We follow IS and IFR. Sir, for tax base, how should we calculate? Common sense. Common sense. Or in the class, if you remember, we have learned the definition also for tax base for assets and liability. The question is regarding that one here. See now, they mentioned that the tax were deducted for profits in calculating the current tax charge. Okay, the tax authority is allowing as an expense. You can claim this expense in the current year only. You can claim the expense in the current year only. So that means what? If you can claim the expense in the current year, that means company tax authorities are also recognizing this as a liability. Tax authorities are also recognizing this as a liability. If they are allowing the deduction today, that means today we can deduct the accrued expense from the profit. So tax authorities are also recording this as a liability. We will come. What is the question? The question is regarding the tax base here. The question is regarding tax base. So what is the tax base for the liability? If you remember, in our regular classes also we have done tax base of a liability is what? If you remember, the same thing we have done. The tax base of a liability is the carrying amount of the liability minus amount that will be deductible. Amount that will be deductible. See now, liability tax base. Carrying amount minus amount that will be deductible for tax purpose in respect of that liability in future period. Carrying amount minus amount that will be deductible for tax purpose in respect of that liability in future period. Whatever is my carrying amount that will be deductible in future. See now, same thing. Interest accrued is same thing, no bete. Interest accrued, etc. XYZ. If accrued for overheads, we have done in the class also the same thing. If you remember, see now here the same accrual for overheads. What is the tax base of an accrual of 40,000? So it is an expense we have incurred that have already been recognized for tax purpose. It has already been recognized. If it has already been recognized, listen here, carrying amount is 40,000. Same question, I'll show you that same question came in your pre-mock. It's not that something out of the box. 40,000, so minus what is the tax base? What is the tax base of a liability? So tax base of a liability is carrying amount minus amount that will be deductible for tax in future. Sir, already we have claimed here. If we have already claimed, do we get more expense in future? No, there will be no more expense allowed in future. So I'll say 0 here. So my tax base also will be same. Will there be anything? Nothing. Same thing here also, a question came in your pre-mock. Yes, sir. So tax base, your tax base will be what? Carrying amount minus amount that will be deductible in future, that is 0, sir, because we have already claimed it in the current year. So your carrying amount also will be 2560, your tax base also will be 2560. Yes, sir. Then chalo next one. Property, plant and equipment. In the draft statement of financial position, property, plant and equipment had a carrying amount of $196,000. Okay, 196,500. Its tax base has been calculated at what? Carrying amount tax base 152,300. The taxable temporary difference related to property, plant and equipment at 1st July 2000 X5 was 30,120. Okay, this 30,120 is on the first date. So what is our year end? Our year end is, if you notice, our year end is what? 30th June 2006. On the first day they have given taxable temporary difference. It's not DTL. It's a taxable temporary difference. How do we calculate DTL? DTL is calculated on taxable temporary difference 30,120 into tax rate. So tax rate kitna tha? 20%. Tax rate was 20% here. So that amount I will take 30,120 into this. I get my opening value. Then management H management has decided to adopt the revaluation model for the property with effect from 1st July. Arre baap re baap. From 1st July 2006. Can I say it is talking about the next year? They are saying next year we will do revaluation and estimates that the fair value of the property is 85,000 in excess of its carrying amount. They are saying 85,000 is in excess. So revaluation. Sir, in taxation we have learned whenever there is a revaluation, on that revaluation we create a DTL. That DTL will go to OCI, sir. But here in this question, the year end is 30th June 2006. See, The year end is 30th June 2000x6. On the next day, 1st July 2000x6, they are doing the revaluation. But they have given the carrying amount here. The carrying amount is how much if you see? 196,500. This 196,500, can I say, does not include revaluation. Does not include revaluation. Do not do this mistake. Many students will do this mistake. This 196,500 does not include any revaluation. Revaluation is done next day, tomorrow morning, not today. Tomorrow morning we will do revaluation, not today. But today we are comparing carrying amount and tax base. Yes, sir. So what is the difference here now? Kitna rate difference? Your carrying amount is more. 44,200. 44,200. So your opening taxable temporary difference is 31,000, 30,120. Your closing is this. Both are cumulative value. So the movement in that will be during the year taxable temporary difference. Here revaluation will not come. Many students do this mistake. It's not included. Yes, sir. Chalo, the next part. So what is the movement, sir? Can we calculate? Yes, calculate this movement. When we prepare a ledger account, if you remember that when we prepare a ledger account this way, 30,120 into 20 percentage, and here it is 44,200 into 20 percentage. If you do this, you get 8,840 here. See, we have not yet read the question, huh? Just based on the numbers I'm calculating, the requirement could be regarding this one. So the difference is 2816 is the deferred tax. This is deferred tax expense in the current year. We will do this. We will discuss in detail. Let us first read the requirement. Sir, this is done, sir. Then lease arrangement. Yes, sir. On 30th June 2006, Hedge acquired the use of a machine by way of lease arrangement. They have taken a machine on lease. The lease term is 10 years. Yes, sir. However, Hedge can terminate the arrangement after 6 years on a payment of penalty. Okay. After 6 years, they can excuse me, after 6 years they can terminate after 6 years and pay a penalty. Okay, sir. If they can terminate and pay a penalty, sir, if the lessee is confident that we will terminate, we include in the lease payment. So now what all are the items we include in lease? If you remember, in lease payment what all we include? So fixed payment, so variable payment should be what? Should be based on index rate, or it should be fixed one in substance. It should not be variable on the usage of a machine, etc. XYZ. Then, sir, penalty, if it is expected that the lessee will terminate it, exercise purchase option, then guaranteed residual value. These are the five things which we include. Okay. And it is expected to do so. Arre baap re baap. It is saying that we will do it. If they do it, sir, we will include in the present value of the lease payment. Sir, then our lease term will be for 6 years, not for 10 years. Then fixed lease payment will be made annually in arrears. So this also we include. Hedge has also agreed to make additional variable lease each year related to the usage of the machine. Sir, variable payment we include, but variable payment should be based on index rate like your inflation, etc. or etc. And it should be fixed today only. But here the variable payment is based on the usage of the machine. We will not include it. See, let me show you the notes also. IFRS 16 are class notes. Yes, see, fixed payments are included, sir. So variable payment based on CPI index rate, inflation, consumer price index, sir, fixed in substance based on usage is excluded. If it is based on the usage of machine or any other item, it is excluded. We will not include. Sir, exercise purchase option, yes, reasonably certain. Then, sir, penalties, if it is reasonably certain that it will terminate it, guaranteed residual value. These are the five components which we include here. Yes, sir. Again, it's a revision of your standards only. H incurred 1,250 to have the machine installed and 750 legal fees to negotiate the lease. Now you only say better. Whenever we install this, where we will take this? Whenever we install this, where do we take this? Can I say this installment amount, this installment, where it will go? Whenever we install the item, that is your lease thing, where do we record the payments? This installation is recognized in ROU, sir. It is part of the ROU. It is part of what, sir? A simple, it is part of your ROU. Understand that. It is part of your ROU. If you remember in ROU, what all we include? Present value of the lease liability plus initial direct cost, payment made before commencement, less any incentive we have got. Then present value of the dismantling cost. That also we include. Yes or no? Present value of the dismantling cost. Yes, sir. Initial direct costs are not included. It is included in ROU, sir. Yes, sir. This point is also clear to us. It's very important that you know. Then coming to the next part. The next part, what is the next part? The next question is saying what? The next question is saying what? Then and 750 legal fees to negotiate the lease. To negotiate the lease, that will go to what? Your this amount will go to straightforward into P&L, sir. It will go to P&L. Then yes, sir, lease arrangement and sales contract. Let us see the sales contract here also. What is the sales contract saying us, sir? See now, on 1st March 2006, Hedge company sold excuse me, Hedge company sold 10,000 identical items to a customer for a total of 12,000. Okay, what is the transaction price? 12,000 is the transaction. Offering 6 months credit, so no problem. If it is 6 months, if it is a 6 months, will this come into picture? Your significant financing component? It will not come in. The next one. The next part is what? The next part is a simple thing. See, you know, H agreed to hold the goods. Okay, okay, okay. Listen, listen, listen. H agreed to hold the goods for the customer until required for up to a year, as the customer has no storage facility. Now you only say H company is selling. I am selling goods to you, but you're saying what, sir? Keep this inventory with you. After 1 month, we will collect. Why, sir? Because in a warehouse there is no storage, sir. Then H holds the goods in a separate area of its storeroom and they are identified as belonging to the customer and available for immediate delivery. Now, which point is coming into your mind? Can I say bill and hold? Bill and hold arrangement. Same question we have done in the class. And in your test series also, there was one question regarding bill and hold arrangement. Same. That means when will I say, even though still the physical possession is with me, I have the goods, still I can recognize the revenue as full amount of 12,000. When, sir, customer has requested, you have requested to me, and I've kept this separately in my room, in my warehouse, not room, storeroom. And whenever you come, I will give you this. It is belonging to you, and whenever you come, I will give it to you immediately. So all the criteria of bill and hold arrangement is being met. So in that case, sir, full revenue we can recognize it. Then by 30th June 2006, H has transferred 100 of the units of the customer. Out of this 1,000, only 100 units are transferred. But you only say better. If the customer has requested, the goods are available separately in a storeroom and it can be transferred, and the H will not sell this to any customer. It is available for immediate sale, delivery, not sale, delivery. It means the it's a bill and hold arrangement. Even though physical possession is with us, we can still recognize revenue. H has recognized revenue of 4,000. Okay, it has recognized revenue of how much? It has recognized revenue of how much? It has recognized revenue of 4,000. It has recognized revenue of how much? 4,000. Yes. Based on the fact that 4 months of the agreed 1 year holding period have lapsed. This is wrong, no? We recognize the entire revenue. So the full amount of 12,000 should be recognized as a revenue. Simple. So till now we have done. We are done reading the case. Now let us identify what are the questions, the MCQs. Chalo then. The first one. Which statement is correct regarding the accrued expense? Accrued expense have a tax base nil and gives rise to a taxable temporary difference. Galat. See now, this question is coming is regarding that only tax base. Carrying amount was 2,560. My tax base is what? Carrying amount minus the amount that will be deductible for tax purpose in future. It is not deductible, everyone. See, the expenses were deducted from profit in calculating the current tax charge for the year. In the current year only we have reduced it. If we have reduced in the current year, do we get anything benefit in future? No, sir, zero. So my tax base also will be this one. So my carrying amount tax base will be same. Will there be any difference? No difference. Nothing will come. The accrued expense give rise to a deductible temporary difference. If there is no difference, then how can it give rise to a taxable and temporary difference or a deductible temporary difference? Not possible. Accrued expense have a tax base of 2560 and there is no temporary difference. Yes, this is the right option. There is no temporary difference here. The tax base of accrued expense is equal to the carrying amount, resulting in a deferred tax liability. You only say the amount is equal, but will it give rise to a deferred tax liability? No, better no. A very easy and a simple question we have done in the class. 3 to 4 questions regarding same thing. Yes, sir. Then, what is the deferred tax charge to profit and loss in relation to the PP? Yes, sir. For the in the year ended. So, for the in the year, what is the deferred tax charge? See. So, what was the carrying amount? So, the carrying amount was 196,500. So, carrying amount was 196,500. Tax base was how much? 152 300. 152 300. Understand that better here. 152 300 is the value. Yes, sir. Will that revaluation take a hit here? No, revaluation will never be considered here. Understand that revaluation will never be considered here. So the difference is coming to what? The difference is the difference is 44,220. It is a taxable temporary difference because carrying amount is more, tax base is less. We can never reduce the value of the carrying amount. We instead create a opposite account DTL. So into 30% or 20 percentage was the tax rate. No, yes, 20 percentage was the tax rate here. 8,840. 8,840. Now, what is the mistake many students will do? Many students will directly write down this 8,840. It is wrong. They are asking for the year what is the charge. They have mentioned what is the opening balance. Taxable temporary difference was how much year opening? 30,120. 30,120 into 20 percentage. 6024. So when I prepare my ledger account, sir, already we have 6024 opening and closing is this much. So what is the increase here during the year? My total is more this side. 2816 is the expense or charge in the PNL. So charge in the PNL is 2816. 2816 is the charge in PNL. Many students will do what? One silly mistake that they will write down this. They're not asking the balance in balance sheet. If they were asking the balance sheet balance, it'll come this. But they're asking what is the charge to PNL. Yes, sir. I hope this is clear to everyone. Now, will we consider this revaluation? No, revaluation is for the next year. Better will not consider for the current year. As I mentioned, I have explained you the logic also. It's not logic, it's common sense. You have to read the question carefully. Then which statement best reflects the accounting treatment that H must apply when it adopts the revaluation model? Assuming that fair value of the property remain in excess of the carrying amount. Fair value will always be more. Then see. The initial revaluation surplus is recognized in OCI income, yes sir, and give rise to related deferred tax which is recognized in PN. Is this right? If revaluation surplus is recognized in OCI, relating to it deferred tax will also be recognized in OCI only. The revaluation surplus gives rise to a taxable temporary difference. Yes, sir. Revaluation will always give rise to taxable temporary difference because they mention that the fair value will always be more. Then, and related deferred tax is recognized in OCI. Yes, sir. This is correct. Let us read the other sentence also before confirming it so that we will not make a mistake. The revaluation surplus has no deferred tax effect. It is wrong. Revaluation model is applied retrospectively and property, plant and equipment and deferred tax. As I mentioned, even though it is a change in accounting estimate, it is a change in accounting policy. It is a change in accounting policy, but IAS 16 says what? IAS 16 says that follow prospective treatment only. Even though revaluation model we use, we record what? The depreciation for the future years. We will not come and restate the value before previous year because IAS 8 says what? Accounting policy we have to follow retrospective for accounting policy. But if any particular standard is saying that you have to follow retrospective only because the complications are more, it is complicated, then follow that respective standard. Yes sir, this is also wrong sir. So the answer is what? B is the right option here. B is the option here. This also done a very easy and a simple question. Theory ka. Then chalo the next one. Which of the following correctly describe the initial measurement of lease liability at 30th June? Okay, lease liability. Let me read it again. They mentioned that 6 years was the penalty they are expected, so we should include penalty. Yes sir. Then fixed payment. Can I say fixed payment also be included? Fixed payment also be included. Yes sir. Then sir. Then, sir, variable payment we include if it is fixed and it is based on this one. If it is fixed and it is based on what? If it is fixed and it is based on index or rate, we include it. Sir, based on usage, we exclude it. And these items will go to ROU. These items will go to ROU. So let us see this. The present value of fixed payment and variable payment. Nine. Variable payment will not come better here. The present value of fixed lease payment, termination penalty, and installation. Installation will not come here, sir. At the present value of the fixed variable payment, installation and legal, sir. No, sir. See, the answer is in the solution only. The answer is in the question only, not solution. The answer is in the question only. Present value of fixed and variable payment. Can I say penalty all? Excuse me. Penalty also we recognize. No. Why we recognize penalty? Because they mentioned they are expected to do so. So here penalty not included. Wrong. So fixed penalty installation will not come. Installation ROU. Sir, installation legal fees ROU. These two are out of the box. So the confusion should be between these two things, one and two. Sir, but in the class we have learned that termination we include. So my answer will be D. Even though I had doubt on variable payment, if I try to eliminate the sentences, still my answer is right. So variable payment on usage will not be included. If it is based on this index, any consumer price index, etc., we include it. And if it is fixed in substance, we include it. Then what revenue should H have recognized in the year ended 30th June in respect of the sales contract? Can I say it is a bill and hold arrangement? In case of bill and hold arrangement, we recognize the entire revenue. We recognize the full amount as revenue. So what is the revenue we recognize? The amount that is included in revenue is 12,000. 12,000. So with this question is also completed. So with this, your section A and section B is completed. So then remaining is your section B, C. In section C, you have consolidation question, which I'll upload the video, and regarding interpretation also. So with this, I hope you have understood all the three case scenarios. If you have any doubts regarding FR and SBR, you can connect with me and ask me your doubts. I can guide and help you. So with this, let us end the session. I hope these videos are helpful to you. If it is helpful to you, please do like and subscribe to the channel for further updates. We'll be coming with our our revision marathon is starting from tomorrow. If you want, you can enroll it and you can attend it. You can message me so that I can add you in the group. It's for free. Or you can check the YouTube channel also. It is uploaded that day 1, day 2, day 3, day 4, where we revise each IS and IFRS in detail. So if you like this, please do share with your friends also who are preparing for the December exam. This will be helpful for them also. So bye bye. Have a good day. Signing off. Radhe Radhe to everyone and all the best for your exam. Do not panic. Now the coming 10 days, whatever you say, 10 days, 6 days, 5 days, you should be cool, be calm, do not take much stress. Whatever you have learned is enough to pass the exam, but what is required in the exam, careful reading is required, and try to eliminate the wrong sentences. So bye bye, have a good day. Signing off, Radhe Radhe to everyone.